Hello and welcome to this special version of the telecoms.com podcast, which is being recorded in partnership with Cerillion. And I'm delighted to be joined by Louis Hall, who's the founder and CEO of Cerillion. Hi, Louis.
Hi, Scott.
So we're speaking in large part because it's your 25th birthday.
Absolutely. 25 years, long time. I should say it's good to be 25 again, but we're talking about the company.
And I'll stress, yes, no disrespect to you, but we are talking about the company rather than you as a person.
Yeah.
And so Cerillion's been around for 25 years, which my rough mental maths means that it was created in 1999. So absolutely. I just thought it would be interesting, for the purpose of this chat, just to... we ultimately want our audience to get a sense of Cerillion, where it's come from, what it's all about, and maybe where it's headed to. So maybe we could transport you all the way back to 1999, which is an interesting time to be doing anything to do with companies because of the dotcom bubble and all that stuff.
Yeah.
And maybe you could just give us initially a sense of what the founding sort of thoughts and strategy was behind the company.
Sure, absolutely. They certainly were interesting times. We were right in the throes of the boost for tech in the Millennium Bug fiasco, or rather, like
which turned out to be nothing.
Nothing, exactly. Yeah. But a lot of money was made, and a lot of companies were boosted by that potential problem. But also it was .com boom. Anything .com was going to be a winner. I guess Cerillion was an MBO. It started as an MBO out of a big UK software house called Logica.
Right, yeah.
Now part of a large Canadian conglomerate. But at the time was FTSE 100 company and was doing very well. But essentially Logica's modus operandi was to sell services at a premium. And of course this predates offshoring and outsourcing to
so this is more like a sort of consulting model, that kind of thing?
Yeah, absolutely.
Yeah.
But because there was no cheap IT labour to be had in most of the world.
Right, as opposed to all the outsourcing to India, etc.
Exactly,
that we have now.
Yeah, so we're talking about very high charge-out rates. And because Logica had done quite well at that, and its business really was building bespoke systems for defence, for financial services, Hong Kong Stock Exchange, transport, London Underground, Bay Area Rapid Transit in San Francisco and so on. So these big infrastructural kind of IT projects. And of course at the time, there wasn't much in the way of software product anyway. Very little products in software existed. Most software was written to order. And so essentially what Cerillion was the telecoms products division of Logica.
Right.
That started life as a spin-off from a project for BT in the 80s. So we built a new billing system for BT in the 1980s. Out of that, once GSM came along as the new mobile standard, and also the more important thing was that we expected most countries to have multiple GSM mobile licenses. So whereas there'd only been one, maybe two players in most countries in the world, that we could see an explosion of new GSM players. So we thought, we'll take this BT experience we've got, we'll build a billing system, what we now call BSS, OSS, I guess. In those days we called it CRM and billing, or just billing.
Right.
And we'll do that for a pilot customer, which happened to be a tiny operator called Jersey Telecoms in the Channel Islands. And then we will cookie cutter that out to all of these new GSM operators that are springing up all over the world. And even within an organization that wasn't designed to be a product business, within our own unit, we were quite successful in the end at doing that. So we'd established this position in the market as one of the new mobile.
I guess Logica at least just let you get on with it.
Absolutely, yeah. It was a fabulous environment in that way. There was a lot of leeway to go and try new things, as long as you're making money. And we were having.
It's always
success.
the caveat.
Absolutely. So we had customers. And I think we got to a point, we'd just done a big deal in Eastern Europe with one of the new Eastern European operators. Of course, 1990, the Iron Curtain had just been removed, and that was another big boost because lots of money was pouring into Eastern Europe for investment there, particularly in infrastructure. And we signed quite our largest ever deal at the time. And that also came with a lot of liabilities and commitments in terms of R&D, roadmap and so on.
Careful what you wish for.
Exactly. So, of course, when we went to the board and said, actually, now we need X million pounds of investment, the board said, well, hang on a minute, I don't think we really want to be in the product business. And what happened there? And a lot of to and fro. I mean, certainly some people in Logica thought that this did have legs and it should stay within Logica, but it was pretty clear that wasn't where the company was going and wasn't its ethos. And in the end, we agreed that we would take that unit out of Logica and go our own way.
So just to quickly butt in, so you had a management buyout, but unless you personally had a hell of a lot of money, you must have, all this investment that Logica was sort of hesitant about giving, you must have had to find elsewhere. How did that all work?
Yeah, so we actually we bought the company from Logica in the MBO just through debt we raised with the banks. And, that was a big risk, obviously, because
just off your overdraft and your credit card.
Yeah, I was somewhat bankrupt forever if that had gone
right. Well, fair play. That's that high risk, high return.
Yeah, it was
entrepreneurial approach.
Yeah, it was a lot of risk. But then once we got the company, got the business out of Logica, we were straight out in the market raising private equity funding, and of course that was in the middle of a dotcom boom. And
this is 1999.
99,
right?
Yeah.
So you were looking to raise money back when money was being chucked around everywhere.
Absolutely, yeah.
So that's good timing. If you tried it a couple of years later, the story would have been pretty different, I imagine.
It's interesting. It's a good point. It would have been, the valuations would have been lower, but the process of raising the money would have probably been easier, because one of the problems we had was that we had customers, we had revenue, we had profit, and we had a business plan. And of course, at the time, investors were throwing money at anything.com.
Right.
And
yes.
almost having customers and revenue was disadvantaged because it blurred the story, you know.
Right, and also, I suppose it also gave them a stick to beat you with.
Yeah, exactly.
Whereas they're used to chucking money at just someone who just sat on a beanbag and had a bright idea.
Exactly. Yeah, exactly.
God, crazy times.
They were.
I think that's happening a little bit with AI now, but that's not what we're here to talk about.
Yep. We see
and
that.
Perhaps not as bubbly. But anyway, so you managed to raise all that, and then and then how did things go from there?
Well, we then pretty much straight away hit the dotcom collapse, and that meant, I think we probably thought we would do this for 2 or 3 years and all retire to Saint-Tropez.
Right.
That didn't quite work out once the bottom dropped out of the market.
The exit being that some big company buys you, and then you
which was what was happening,
or put your feet up.
Just a bigger private equity fund would buy the whole thing. Before it made any revenues. But of course, we were in a slightly different position. But no, we then had to build a real business, and that was a hard slog. It wasn't easy, but I think we had a very clear vision. So at the time, we thought that the future for software was going to be products, and very much what we were doing was trying to sell an integrated BSS OSS suite, pre-integrated to telcos, rather than what was probably flavor of the month at the time, which was a best of breed approach, where you buy one module from one vendor, a specialist in that space, and another module from another vendor. So you buy CRM from one person, then you got from somewhere else.
Interoperability stuff.
Exactly, yeah. And then you have a
so you want to be a one-stop shop for BSS OSS.
Yeah, and I think it's
quite ambitious.
It was, especially given the size we were, and I think we plugged away at that, and it took a long time to get established in that form, and actually rebuild all the different modules such that we had a truly market leading product. But we hit some early milestones. We were the first 3G biller in Europe with the BT pilot on the Isle of Man for Europe's, I wouldn't say world's first 3G, so I think the first one was actually in Japan, but Europe's first 3G.
Yeah.
And that was a really interesting project with BT and NEC. So we were getting established. And I think what's really interesting is that by the time you get around to software as a service, that's sort of essentially what we were trying to do, had been doing all along, what we were trying to do in the early 2000s.
Right.
This concept that you get everything from a single vendor, it's all pre-integrated. You don't, every customer uses the same software. We haven't got multiple versions of different customers. Because in our market, we're generally competing with vendors who have product frameworks, but then look to do huge amounts of services work around that framework to provide really quite bespoke, customized solutions for each different customer.
See what you're saying, yeah. And presumably there's, without getting into minutiae of the commercial side of it, one of the appealing aspects of consulting versus actually producing products is that the margins are often pretty nice for consulting.
Yes.
So I imagine that can be a business driver behind like tailoring and bespoking stuff rather than just off the shelf. But
the margins, if you look at those players, the margins are much lower. I mean, we're typically trading on between 40 and 45% EBITDA margin, and you can only achieve that if you're selling lots of licenses, and not just selling licenses, but recurring software as a service, term licenses, subscriptions. Yeah,
right. So we'll get a little bit more into your sort of particular approach to all this technologically in a sec, but I just wanted to finish our sort of recap of the 25 years. And I know one major milestone was you did eventually get to an exit. Yeah. Although I note you're not currently in Saint-Tropez, so it probably still didn't quite play out the way you imagined. Yeah. But your exit of sorts was an IPO.
Yeah.
So that was what, 16 years later, was it?
Yeah, 2016.
Right, 17 years later, right.
Yeah.
Although I was just going to ask how, as an inflection point, what that meant for the business, what that meant for you personally. So you had obviously you were never able to completely call the shots because you had private equity investors who presumably had some ideas about how they wanted things to go, and now you've got shareholders. But just have a little talk through that as an inflection point and how it's changed.
Absolutely.
Things.
I think it's interesting that a lot of people say when you go public, it's a straitjacket, but because we'd had two different PE funds involved for all those years, in a way it was a release because you have a lot, compared to PE investors, you have a lot more flexibility.
A longer leash.
Yeah, exactly. And yes, if you get it all wrong, then, you've got 30 or 40 fund managers whipping you if you, but there's not much in the way of day-to-day interference.
Yeah, private equity people, without naming any names or slagging them off, they get to where they are by being fairly hard-nosed capitalists. So
they do, yeah. But also have quite firm ideas about how they think the market is and how they think we should respond to the market and so on, and often not a lot of real-world experience as to how these things really work.
It's a pretty sort of niche and arcane area you're in, isn't it?
Yeah. So yes, it was. I mean, we IPO'd for three reasons. One was we needed to exit the PE guys who'd been there for 17 years. Well, actually 16 years. They invested. Their first investment in 2000. But also we could see that having the public company kudos would help us in the market, and we're actually surprised by how much difference that did make. I think the fact that potential customers, especially the larger ones we're now selling to, can look on the internet and see what's on our balance sheet, and it just gives us more credibility, I think.
Yeah. And
the third reason we did IPO is so that we could go and do acquisitions. So we only ever done 2 acquisitions to that point, small ones, and we thought with the public equity, public market capital we could raise, that would give us a way to do much bigger acquisitions. Okay. And essentially what happened was that the founders, if you like, created a PLC and then went out and raised the money in the IPO to buy the original company from the PE guys and ourselves. So we essentially rolled all of our equity into the PLC. So for us, it wasn't an exit; it was a way to carry on to the next level, but exiting the PE.
Hence the link of Saint-Tropez.
Yeah.
And so, I guess what I'm ultimately getting to is just your evolution. So we got the initial concept of a billing or BSS OSS one-stop shop. And how have you evolved such that, and this is an opportunity for you to sort of articulate what your market positioning, what your unique selling points, differentiators are now. How have things evolved into today's Cerillion?
Very good question. So I think the interesting thing is I think history has finally caught up with us, if you like, and we have history behind it. So the fact that the world now wants to buy SaaS software, is exactly in our sweet spot, and in a market where we've always said it's much better in terms of total cost of ownership and time to market to buy a pre-integrated suite, and that everyone has the same software, so that can then be upgraded very easily and so on. rather than having to unpick all of the complexities of bespoke solutions. And that is a SaaS model, So I think that's a really big USP for us. And
so you're in the right place at the right time as far as that.
I think it's the right answer. I've always thought it's the right answer.
Yes,
but that's no.
You've been in the right place for ages.
Yeah, it's no good if the rest of the world doesn't agree with you. So we now think the rest of the world now sees that to a large extent. Telcos are slow adopters, so there'll be some time before the biggest telcos are going with a SaaS, BSS, OSS. But bigger and bigger telcos are, and I think the economics are so compelling. It's just a matter of time, really.
Yeah. And what else is it about your offering? So we're in the sort of BSS space. We hear a lot of buzzwords like digital transformation and that sort of thing. What is it that you're trying to do for your operator customers right now that you think is distinctive?
I think it is excuse me, it is about digital transformation, but it's a very overused word, or sorry, to say two words. But it's about giving customers a seamless experience, so that from coming on to the website or on the mobile app and engaging in terms of whether it's an inquiry or subscribing to services or whatever, everything else is seamless and flows from there. And when something goes wrong, there are easy ways for customers to re-engage, and you cut out all these human interventions that you have in the more traditional scenario. So I think there are massive benefits in terms of, because it's all about getting customers engaged in a way that's as easy as possible for them. But once that's happened, to make sure that everything then flows in the back office.
And that's obviously very difficult.
Without lots of people.
In the context of this, I won't name and shame the company, but I recently had a sort of customer experience trying to just get through for a basic bit of customer service. Yeah. And I was sat in a queue for a chatbot, which then terminated itself. And then the next day I was in a queue for a phone, which eventually got there. And it's the simplest thing that I needed doing.
It's crazy.
So these things obviously aren't done well. And then an additional challenge. So operators obviously got that challenge. They're quite a sort of, I presume they have quite a high level of incoming sort of customer queries.
Yeah.
As they're consumer. Well, they're both, but very consumer facing. But then there's also got another thing that I associate with a lot of the rhetoric that goes on around digital transformation is sort of product innovation and just bringing new stuff to market. And I always think, as a telecoms journalist, I think, God, it must be difficult, because I'm trying to think of what new product my operator could offer to me that where I would pay, which would increase my ARPU, make me give them more money. So is that part of what you do as well, like helping
very
them
much
with?
So, yeah. So because everything's integrated, it's a good example, because whatever we can think of as new products do get dreamt up all the time. And one of the biggest challenges telcos have is that with a traditional bespoke system, most new product introductions need a whole team of people to come from the BSS OSS vendor on site to kind of make that work, and introducing a new product can take 3 months, or it's a crazy scenario. So what we provide is a fully integrated product catalog where our customers can build new products in a powerful GUI tool. They can test those products in a test environment. They can then publish new products once they're happy with them to a production environment. But also now we're using AI tools, so they can draw new products diagrammatically on a whiteboard. So you think about a typical quad play, fixed mobile, all sorts of different types of mobile going on, broadband, TV packages. All those options can be whiteboarded and then photographed and loaded up into our product catalog, and it will convert them into the new product. So you see it appear, boxes on the screen, and so I think
maybe there is some reason for this AI bubble.
Yeah. But I think bear in mind that we're in a very developed market, one of the most sophisticated telco markets in the world in the UK, and other places are not at that stage yet. So they need to innovate. There's lots of innovation space to grow into for telcos in some of these other jurisdictions. So we're running out of time, and I want to get into what the future holds, but there's just one more retrospective question I want to throw at you. Just looking back over time that we've been talking about,
Is there anything that jumps out that you would have done differently? Hindsight being 2020.
Yeah, I think if we could have done it all a couple of years earlier before, and had a longer run before the dot-com.
Before the general environment was so hysterical.
Yeah. I think that would have helped a lot. But, I think we can always say, if we just done this and just done that. But it's hard, there's nothing fundamental where sometimes you think, well, if only we'd just been 10% cheaper on that deal, we might have won that customer at an earlier stage and then we might be further ahead. You can always say those things, but I think to have arrived at where we are today, it's not a bad outcome. It's taken longer than I would have hoped, but I think
I think plenty of other companies roughly in your space have come and gone in that time.
Yeah, absolutely.
So that durability alone is an achievement. But presumably you want to do more than just hang around.
Absolutely.
So we'll finish off by just saying, what the future holds, what your plans, aspirations, strategy, all that is.
Yeah. So we essentially IPO'd back in 2016. Since then, the company's grown. And revenue's grown at least 2.5 times. So we want to carry on that journey. So from a sort of economics point of view, we want to double again in the next 3 to 4 years. And I think key to that is bringing in another 3 or 4 tier 1 telcos in which we're working extensively. So the likes of Virgin Media, which we won this financial year.
Okay, congratulations.
Thank you. But we need more of those big logos, and that is sort of the 3 to 4 year view, and then after that, I think the jump to go from a $1 billion company to a $5 billion company is more straightforward than going from.
Is it? It's just like a snowball sort of thing.
Well, I think you just then have a bigger structure and more repeatable.
Right, it's a scaling thing.
Yeah, exactly. Yeah. So, but I think putting aside the economics, we want to be seen as the leading BSS OSS-as-a-Service vendor in the space. Every customer sharing the same product. It's a one-stop shop. Lowest TCO, fastest time to market, all those advantages. And to be like the Salesforce of telco, BSS, OSS. In addition to that, there's also the potential to go into other verticals. So we've done nothing major really around utilities to date. So that's something we might look at in terms of bigger acquisitions as we go forward. And another interesting angle, of course, is the whole smart city initiative. So we have a big project with Nokia and Orange in Egypt implementing the BSS OSS for the smart city infrastructure. Okay. But that's everything. That's not just power, water, gas, and telecoms. It's parking tickets. It's cinema tickets.
Full Monty.
So I think it's interesting to see how the world develops in the next 5 years and how much we can take advantage of that direction.
Okay, well that's brilliant. Well, I think we'll wrap it up there. I'll just finish up by saying again, happy 25th birthday. Quite often people on their 25th birthday go out clubbing and stuff. I don't know if that's what you got in mind.
Absolutely.
But presumably, whatever you do, you're having a sort of party celebration. So have a drink from me when you do that. And thanks a lot for your time. It was fascinating talking to you.
Thank you, Scott.